Hi, I'm Jason with Level Up Investing, and in this channel I talk about personal finance and investing topics for busy people. I'm going to talk today about a shopping spree I went on today, and I didn't go shopping for clothes or electronics. I went on a shopping spree for stocks, specifically dividend-bearing stocks. So today is March 4th, 2020, and the market is at a low over the last couple days for various reasons. Some say it is the beginning of a new recession. Some say it's just a correction. There's some things going on in the news. I'm not going to speculate over the why. I am going to focus more on the fact that there are some good deals out there, that some of the stocks have really dropped in their price, that the sale price of each stock, some of these stocks, is much lower than the intrinsic value. So if you're a value investor and you want to get stocks at a deal, then this is the time to do it. So I went ahead and bought some stocks today, which I'm going to go over, and it's going to be very specific about dividend-bearing stocks. Keep in mind that I went ahead and bought these stocks after researching them myself and reviewing them and making some conscious decisions. For your own investment, keep in mind this is not in any way a recommendation of these stocks for you to buy. You definitely have to do your own research and your own review and your own decisions about the stocks that you purchase. So having said that, let me go over the 3 criteria that I used today to purchase these stocks. So the first thing is that the stock has to pay a dividend, meaning that the stock pays out a certain amount every year just for owning the stock. And so that is the return on investment that I'm looking for in this purchase, like I do in any other purchase. So it has to be giving a dividend. Number 2, I chose stocks that have been giving dividends for a long time. And not only for a long time, but also increasing the dividends for a long time. Some of them are about 10 years, but some of them up to 50 and 60 years. So that qualified the stocks as being companies that are really high value, blue chip companies, and also what we call dividend aristocrats, some that have given dividends for a long time and show no sign of slowing down when it comes to dividends. So that's criteria number 2. And number 3, the stock absolutely has to be at a deal right now, where the price is much lower than the intrinsic value of each individual share. So I looked at things like the 52-week low, how close it is to that, as well as the price to earnings ratio and a few other metrics. Remember, it's important to utilize several metrics when you're making a decision, not just one or even 2. Certainly not just the stock price. So I use that criteria to make sure that it is a good value when I purchase today. Okay, so without further ado, let's go right into the laptop and look at the TD Ameritrade account, and you can see the 5 different stocks that I picked and why I picked them, the metrics, and let's go for it. Okay, so here we are on my TD Ameritrade account page, and the first stock that I chose was 3M. So 3M, you may know of 3M as a company that makes Post-it notes, but they make a whole lot more than that. They make automotive original equipment manufacturing, appliances, paper and printing, packaging, food and beverage, and construction, so quite diversified. There's also a healthcare segment that includes pharmaceuticals and health information systems and food manufacturing and testing. So there's a whole lot that 3M does. It's been around for a very long time, and for the purpose of this shopping spree, I also liked 3M because it has given a dividend for a very long time. So let's scroll down here. And let's see here, get my pointer. So first thing is, yes, there is an annual dividend, and the current dividend yield is 4.05%. So that is quite good. The other thing is that the 52-week range, the current stock price is near the low, and you can confirm that with the graph here. You can see this is a 3-year spread. So those are all important factors to look at. And you take a look at some of the valuation. Let's get rid of that. Valuation. You could see the price to earnings, which is at 19.58, which is much lower than the industry average at 31.41. So that's another good indication. Let's see what else. Profitability, gross profit margin, operating profit margin. A lot of these are, well, all three of these are above the industry average. And for a dividend, you can also see the annual dividend yield is also above the average. So here's the industry average, the line, and then this is the company. So you can see that right there. So this is where 3M is. Also, the positive dividend change also is outpacing other companies. So I decided based on all those metrics that 3M was the way to go. And I went ahead and purchased $20,000 worth of stock on 3M today. So all of the 5 stocks that I chose today, each one was a $20,000 investment. So 3M was the first one, and let's look at the next one. So the second company that I chose was ExxonMobil, XOM. So many of us know what Exxon is all about, but just so you can see what the company wrote, ExxonMobil Corporation is engaged in energy business. The company is engaged in the exploration, production, transportation, and sale of crude oil and natural gas, and the manufacture, transportation, and sale of petroleum products. So many of us are very familiar with Exxon being an international company. So let's take a look at some of the metrics, which are the reasons why I chose this company as well for the shopping spree today. If you take a look at the, let's go down here, let's scroll down a little bit. The annual dividend, the yield of 6.78%, which is quite good. The current price is close to the 52-week low. 48.01 is the 52-week low, and this was selling today at the time that I bought it around 52. So you can also see the graph here at the price change over the last 3 years. So what makes this stock a good value? When you look at the valuation, you can see that the price to earnings, as well as price to sales, and the price to book value of the stock these are all lower than the industry average. So this was the reason why I chose this stock. You can also take a look at the dividend yield, and you can see that the actual annual dividend yield is on par, slightly higher than the industry average, 6.78% versus 6.23%. So this was the reason why ExxonMobil, as many of you know, this company's been around for a long time and has been giving dividends, paying out dividends every year for many years. So this is definitely a blue chip stock that is probably going to be around for a very long time. So I decided to get that at this current price. And let's go and look at the third company that I chose for this shopping spree today. Okay, let's look at the third business, the third company that I invested in today, and that is Tanger Factory Outlet Centers, SKT. Now, I have never invested in this company before, but I read up on it, looked at the numbers, and I pulled the trigger on it today. So Tanger Factory Outlet Centers, let's look at the company profile a little bit. It is an owner and operator of outlet centers in the United States and Canada. The company is a fully integrated, self-administered and self-managed real estate investment trust, or REIT, which focuses on developing, acquiring, owning, operating, and managing outlet shopping centers. So the key is that this company has focused on the bargains, the outlet center needs that people have, and this company's approach is the real estate side of it, the real estate investment side. So let's take a look at this company. And if you take a look at, let's look down here. Okay, so first of all, the most impressive thing here, if you look, is that it has an annual yield, annual dividend, but look at the yield. This is 11.97%. So this company has been giving dividends for many years, and it's really at the top of the list when it comes to dividend yield. So quite impressive. The price is at the towards the low as well, and so that really got my attention right away. So I was very interested in this. Let's look at some of the other key points here. Let's get rid of that. And let's look at our valuation. Okay, so this is quite impressive. You can see here the price to earnings ratio right here, way lower than the industry average, 13.24 versus 40. Price to sales, price to book, everything is demonstrating a significant value here compared to the industry average. And let's look at profitability. Gross profit margin is above the average here. And of course the dividend, I mean, look at the annual dividend yield. Here is the industry average, and here is Tanger, and it is just off the charts. So so this was a no-brainer that I went ahead and purchased quite a few stocks of this, currently selling at $12.31. So again, the price itself of the stock it really doesn't tell you much. I mean, I couldn't tell you just looking at that whether that's a good deal or not. What you do have to look at is you have to look at earnings. You have to look at the price to earnings and compare the company to the industry to its peers. And so that's how you can really determine. That's how I determine it, at least. So that is Tanger, and that's the third stock that I purchased today. And let me show you the fourth stock. Okay, so the fourth company that I chose today is Genuine Parts Company, or GPC. Again, this is another stock that I have never invested in before, but with the market the way it is today, it got me looking at many companies today. So I looked at this one, and let me show you what I found here. So first of all, Genuine Parts Company, it's a service organization engaged in the distribution of automotive replacement parts, industrial replacement parts, office products, and electrical/electronic materials. So a lot of automotive, industrial, and office products, replacement parts. So let's look at the key numbers. First, you can see the annual dividend yield of 3.66%. So that's quite good. And the current price is close to the 52-week low. And so, for example, the 52-week low was 84.41, and this closed today at about 89. So it was close to there with a high range of 115. Let's look at some of the numbers to look at the valuation of this. So let's scroll down. So looking at the price to earnings in comparison to the industry average, you can see the price to earnings is lower than the average. This is also pretty impressive that the price to sales and the price to book value per share is also lower than the industry average. Quite low, actually. So what this is telling us is that this is currently selling at a very good value compared to the industry, and this is what made me interested in purchasing today. So let's look at what else we have. You could see the operating profit margin here and net profit margin were far above the industry, and for the actual dividend, annual dividend yield, far above the industry average as well. So you take all these into consideration, and it really made it a no-brainer for me as well to purchase GPC today as part of this shopping spree. And the final company I purchased is one company that I know very well, and that is Wells Fargo and Company. So Wells Fargo, a bank holding company, diversified financial services, with three main operating segments: community banking, wholesale banking, and wealth and investment management. Okay, so many of us have heard about Wells Fargo, so let's look at some of Wells Fargo's numbers. So taking a look at the annual dividend, $2.04 annually with a yield of 5.03%. The price also was on the low end, and you can see the price changes over the past 3 years. A lot of things happening with Wells Fargo recently, and a lot of things in the news, which I think have a lot to do with the volatility of the stock price. But nonetheless, again, I don't like looking at the speculation of it. I like looking at the actual numbers. So let's take a look at some of the key numbers here. Let's see, undervaluation. So the annual dividend yield here being far above the industry average. That was a key measure for me, a key metric. The price to earnings was pretty close to the industry average, but the price to book value, again, the actual sale price of the stock, of the share, was much lower than the intrinsic value. So that was the indicator to me to go ahead and purchase this stock. So today the stock price was at 41, around 41, and it's pretty close to what the 52-week low has been. So again, not just the price, but the price when compared to the value of the stock and compared to the industry average. And there you have it. Those are the stocks that I picked today on my dividend stock shopping spree. And keep in mind that those are what I picked for myself. You definitely need to do your own due diligence when you're looking at stocks and doing your own investments. So do your own research. I just want to give you an idea of what I saw today and what I acted on. So if you like this content, give a like to the video, definitely subscribe and hit the notification bell for future content. And we'll see you on the next video.